wait, I want this on its own thingy. Okay, we are live streaming already. Okay, yeah, so back to trend lines, yeah? Can you see anything? Go on YouTube. Are you on YouTube? Okay, I think I need to give you the new link. Let me just quickly get it. You can open that. It should be cool. Okay. Ah, man. Okay. I think I'm gonna open new charts because I've got so many charts open right now. Okay, we're gonna start with your trend lines, and then I'm gonna continue on with my analysis that I had like from yesterday. So let me just open a new chart. This time I'm gonna open with a new currency so that we're not dealing with the same currency all the time. If that's cool with you, yeah? Okay. Can you see the video already? Okay. Let me just remove this. Okay. Okay. Are you on your laptop or phone? Oh, okay. It's gonna be a problem for you because you're gonna be hearing me twice. Okay. Remember last time we had left off and you saw that having a line chart is easier to draw trend lines than the candles. You remember that? Okay. So yeah, like from there, line chart is quite easy because you could just do this or this. And actually this looks better. Could draw that because if you go back you can see, look at that. Can you see that? See? So we've got a trend line over here. It became support at one point, but not credible support because it got broken so quickly. But it works really well as resistance on the 4-hour chart. This line. Let me just zoom out. So you can see. So do you understand now? If you know how to draw them, what's the point of like drawing these trend lines? Do you know why they would be useful? Okay, so basically, like the market has a memory. If you had to think of it like that, it has a memory of price action. So people that use trend lines and Fibonacci and all those things usually find prices that how can I say, psychological prices. It's either a price they remember that was hard for them to go through, or they lost a lot of money, or something happened at that price. So people play within that price, or they recognize it easier. Given this chart over here, there's a lot of numbers. You can't really recognize any of these, but someone can easily remember 95. So 95 over here is an interesting point because someone can easily recognize it. Someone can easily set a target around 95. So that's how you get support, resistance prices, or psychological prices. This here is a psychological zone over here because it's easy to notice on the chart. You see, as well as but this is a very difficult currency pair to deal with because the numbers are so many. If you had to go to something like, let's go to the yen. It's a very good example. Trend lines basically help you to recognize where the market might turn. You get it? Or it might change direction, return to a certain direction. So that's how trend lines help you. Like here now, okay, this is perfect. Looks like the market just turned again. Okay. On the market, we had this trend line coming out here, and then we had a pitfall, like market went straight down. You can't even draw a trend line on this because it's so sharp, but you could draw a resistance line to see where the market could have stopped. So maybe like this. See, so this resistance line gave us a point for where the market could have stopped. If you had this line in and you had this trend line, and when we had this nosedive over here, you could have seen that, okay, around about here the market could stop and you can come out of the market, because sometimes you don't know where to come out. So trend lines and support lines, resistance lines, they help you recognize where you can set a target. You get it? Okay, so let me just make this one right. And you can also use Fibonacci's to draw support lines that are horizontal, like this. And the most influential Fibonacci numbers have to be 61 and 50. As you can see, the market really stopped around here. You see, 61 and 50. They're very influential. So you usually point it from where the trend started to where it ended. So I'm gonna ask Neil to help me out. Okay, no, I'll ask Neil to help me out because I don't use Fibonacci. But I understand a little bit about it, that they use influential zones like this. So it's Fibonacci basically, it's all about retracement and how much the market has moved in a certain direction. You see. So if this had to be, let's just do it like this. This is 100% of the move over here. And this is from 0. So you can see this is 0. The market is currently retraced. Okay, no, this is the wrong way to draw it. It's actually the wrong way to draw it. Let me draw it like this. Neil has a better understanding of Fibonacci than me, because I have not spent time on Fibonacci at all. I just use it to recognize. So okay, if we had to say this is 100 and this is 0, the market hits 0 and now it's about to retrace about 23%. So most of the time these smaller numbers are easier to get through than the bigger numbers, but unless there's a trend line coming down. So the trend line can tell you what's happening, like here. So I can see already now that this 23 is going to be hit. You see, this 23 is going to be hit very soon. Let me just put an indication right about here, and the market could continue just like we did here. We hit 50, or we came up here close to 60, and we hit this trend line, and then we were sent down. You see. So we have a channel. We actually have a channel going down. Let me go back to the graph like this. You can see. Check where we hit 60, 61, and we went straight down, because we were trying to go down, but we couldn't, so we needed to find basically resistance, and then we found resistance again on the trend line actually. So the trend line was the one that sent us down, straight down, and then we came back up to 23, went back down. Now we're looking for again because we want to continue. We haven't hit the trend line yet, and you can see this support line is coming in. Let's move it down a little bit more. Actually, I can remove this one. This one's not valid. Okay, so if you can see this channel over here, the market hits the trend line, and continues onwards, bouncing off it, basically like this. I'll just show you quickly. Where are the lines? Ah, there we go. Okay, look at this. Straight down, we hit the trend line. We went straight down, we hit the trend line, and then we tried to go up here, but we didn't find the trend line at all. It wasn't there. It was close. So we went down, and we managed to come back up again and hit the trend line. So we hit the trend line there. It's better if I do this. And from that top trend line, the resistance line, remember I make it red so that I can show you that this is resistance, and I make it green to show you that this is support. So support pushes price up, resistance pushes price down. So we hit resistance, and we went all the way down here, even lower. But you can see we actually consolidated around this place because the price never put it a new high, never put a new low. But we actually did put in a low here. But you could just, if you thought about this zone, there's our, actually, yeah, it's still consolidation. We consolidated, we stayed around here. Okay, now it looks as if we could still go up again and hit the trend line again and continue down. And this could be because the Fed didn't actually hike rates like everyone thought they would. Let's just quickly go check, because if I remember carefully, I was at school, but I remember they didn't hike rates. So okay, let's just see quickly, where are they? And this is something you need to keep on later, and I'll teach you later about it. You need to keep clear of what they're doing. So the Fed was supposed to hike rates, or the market expected them to hike rates, and look, it's already passed. Wait, aren't they hiking today? Because they didn't hike rates. So you see, they were supposed to hike rates, but they didn't. Because if I'm sure, yesterday I read the news and they didn't hike rates like everyone expected them to do. I don't know why they're still saying 31st. Today is the 1st. So the Fed didn't hike rates at all. So like everyone's wondering what's going on now. I don't know where I'd find this information on this website, but okay. This is something I'll read later. But the Fed didn't hike rates. If they happen to have hiked rates, the value of the dollar would have gone up. It is going up a little bit here, but we should look for it to come like this. We should look for it to come like this and continue down. Actually, can put it here. Let's just zoom out quickly. So this dollar is gonna hit this Fibonacci over here, or this trend line, and continue down. You see, so you understand how to use the trend lines right now, or have I not explained them adequately? Okay, I'll just open a new chart. I'll give you an example with Euro USD or GBP USD, maybe something more interesting. Okay. Look at this trend line over here. I drew these the other day. So Fed didn't hike rates. These are supportive trend lines. Right now, there's no resistance in sight for the pound. If there was, it's a very, very steep. So, but there's a lot of support, you know, more indication of support. So there's less resistance up here, you know. The support just keeps coming in for the pound. But everyone, I don't know, myself, I'm a bull, so not a bull, a bear. So I would really believe this should stop a little bit at least, and dive down a little bit. But anyway, always remember, supportive trend lines go at the bottom, and resistive trend lines go at the top. You got that? Okay, let me just remove this so I can refresh. Okay. So, as you can see, within this channel, there's actually a channel here. And the channel has been moving up. We broke through it, found support, but only to find some form of resistance and go back into the channel, and then the channel continued. So you can see here we were really at the top of this channel, broke out of it, but it did have resistance over here. This is a resistance line at the top. Just put it a bit higher, because it's a channel. I don't have to draw with one line the whole time. I'm using this is just a indicator that they have with MT5. You don't have to. It makes it easier for you to just draw quickly a channel. This is a channel. You see, if you're getting confused by that, I'll just remove this and show you that the channel is still there. If I draw it by hand. Okay. But it's easier if you drew it with the other one, because it's more visually. There we go. The channel is still there, even if I drew it with the same. But now remember, the one on top of price is resistance, and the one below price is support. The moment price breaks above that line, yeah, it changes. It becomes something else. So if the moment the price is above it now, yeah. Okay, let me just show you. I'm gonna color code them. I'm gonna color code them so that you can remember. Let me just do this quickly. Okay. Okay, can you see this? Yeah? Right now the price is going, and this line is above the price. At one point, the price was above it, but most of the time it was above the price. Forget these lines over here. This is not the price. It's just where the price went and never really stuck. So this line over here is below the price. Yeah. So any support zone below the price, any zone below the price is support, and any zone above the price is resistance. Yeah. And a better way to explain it, resistance pushes price down, support pushes price up. Can you see that? You get that, yeah? Okay. So the moment we moved, we broke out of it. We broke out of it. Now this line is changed. It's no longer resistance now. You get it? It's no longer resistance. It's now support. You see? Then we hit it, but we couldn't go down below it. It's still support because the price never went below it. You see? Support, you see there. It's because the price it's below the price now. Remember, anything that pushes the price up is support. You get that? So it's still support. There we go. Now it changed again. It changed again. It's no longer support. It's now resistance. Because it's pushing the price down now. It's no longer pushing the price up. There we go. There we go. It's still resisting. Can you see that? So did you understand what I said there? What I explained there? So if I had to go back, if I looked at this, I would say no, this is support. It shouldn't be red. It should be green. You can color code it whatever you want, but I like to make it red for danger. Okay. So this is still no. This is still resistance. It's still resistance. It should be red. It's red. So it's resistance at this point. This is still support because it's pushing price up. This one is resistance because it's pushing price down. Look, price goes down. Price goes down. Doesn't matter. Doesn't matter what kind of candle it is. The price goes down. Price still goes down. Price, boom, breaks out of it. It's support now. It changed. The moment price breaks it becomes invalid and changes its behavior now. So the market should try and look for support from it. Still support because look, the price went down, boom, it pushes it up. Doesn't want it down there. Boom, again, still up. Still going up. Now it changes. Now it's resistance. It's back to resistance now because it's pushing price down. Can you see that? Yeah? Okay. This one is still support, but this one is still support because it's pushing price up. So yeah, you can see there. This is still resistance. And I can show you in another chart if you want. Same thing. Let me zoom in. Okay. Let's just do this. Look at this. This one is resistance. It's pushing price down. No matter what, pushing price down. It pushed the price down, and then the market found support. Boom, goes up. Support always pushes the price up. Then we hit the resistance line again over here. You see there? It pushes us down. Resistance is down, support is up. It's pushing us up. So right now we hit support again and we're going up again. So yeah. Now let me show you. They don't have to be diagonal like this. They can also be horizontal. So I can open a new chart and show you quickly. South African Rand. So that we're not using the same currency pair. Okay, yeah. I could use anything. I don't have to use. I could use just these lines alone. What the hell? Okay, there we go. I could use these lines alone and draw them out. See there? And you don't want to put it when you drawing horizontal lines like this, you just don't want to put it anywhere. You want to put it where a big candle breaks the line. You get it? Or where there's significant push, where there's significant denial. Like, the way I would say it, the market keeps trying to break it, but it can't. So here there's significant denial over here, down here. You see, it's either a big candle breaks it or significant denial. You get it? So these lines over here are also support and resistance over here. So this one is definitely support. I can just tell you that off the bat. Oh, looks like we're under 1 hour. Okay, that's fine. Okay. The price comes, boom, pushes it up because it's support. Yes? You see that? And this one actually can go a bit lower like this. This is resistance. Currently the price is below it, so it's resistance. You can see it came, price, boom, it pushes it down. Price had to break it up and then it became support. If I had to do this, I'll show you quickly to illustrate this more better. So it's resistance, keeps pushing the price down, keeps pushing the price down, pushing it down again, and then comes, boom, broke it. It's now support. You see that? It's now support. Pushes the price up, boom, price breaks it again. It's now resistance. But at the same time, it came up again. It didn't hold, but it was resistance at one point for a short while, only about 4 hours. And then we found resistance again, went down. Now it's a resistance. Currently, that line is resistance. So you can see that. So you get the horizontal support and resistance lines. Yeah? Okay. Can have a better look like that there. See. So currently this is 11.23 or 11.25 is support currently on the euro on the dollar ZAR. So you can see that, and major resistance has to be 12. We tried to hit it yesterday. 12.025 is major resistance currently in the short term, really short term. I don't like to talk in those people saying short term, but it's not really. Yeah. So you can also use Fibonacci. You don't entirely have to use these lines alone. So I'll just remove them quickly. And some people prefer using Fibonacci for horizontal lines. And there's also a vertical Fibonacci, but I won't get into that. Just want to remove all of these. Okay. Let's go back to the 1 hour because the ZAR moves a lot. Okay. Let's go this. Okay. I don't know. Lower the volume. I'm about to end. Okay, so I've just let you out with this. You can see Fibonacci also can act as support and resistance. Let me put them at the complete extension, even though I don't prefer to do that. But Neil will tell me the best practices for Fibonacci. Neil knows much more better than me. Okay, here we go. So support and resistance using Fibonacci. Okay, let me actually do this. I'll also show you how to use MT4 and 5, but more 4. I'll show you how to use 4 because I prefer that. Check. You can see zones already that are picking out as support and resistance. 50 Fibonacci retracement, 50 is already an important zone, and then 60 as well. You can see these are very influential when it comes to the Fibonacci sequence. 50 and 61 are very influential. They're usually major turning points, and price usually needs such big candles to go through them, usually, or consolidation and then a breakout. Same thing, consolidation and breakdown, so like that. So yeah, I don't know if you can see this head and shoulders. I don't know if it's a head and shoulders, but I don't like to get into patterns. Yeah. Okay, yeah, that's good. We'll continue on tomorrow. I think everything's fine. Yep. Okay.